It's time for the market prep video here on Stonkcast. The S&P 500 hit a new all-time high last week. As of right now, it seems like the bulls are in full control. We'll give you the latest on President Trump's proposed tax bill. Elon Musk is tweeting again, and we will break down what July looks like as far as seasonality. Is it bullish? Is it bearish? Also, stick around till the end. We will lay out the key economic data you need to be paying attention to on the shortened trading week heading into July. Don't forget to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back, folks. It is June 29th. We are almost into July. We got the 4th of July coming up this week. We got a lot to unpack on this market prep video. So let's hop right into it. First of all, let's do a market check-in to kind of see where we stand right now. The S&P 500 hit a new all-time high last week. Just simply incredible considering where we have been over the past couple months. As I've said many times on this show, we had the April lows all the way down here at 48.35 on the S&P 500. And Friday, we closed at 61.73. We have a new all-time high, which is just simply incredible. As far as the NASDAQ, that is also at an all-time high. The Dow Jones is above the 200-day moving average and also creeping up there, not quite at a new all-time high yet, as well as the Russell 2000 small caps toying around with that 200-day moving average. But if you expect this move to continue in the overall market, then maybe you want to front run small caps there and be a little bullish on that. But as of right now, everything is really getting propped up by a few different things, which I'll break down here. But tech is really the thing that is driving this new all-time high in the market. One thing you can look at here on the S&P 500 for where we might be heading, because we are technically in uncharted territories, Fibonacci extension levels. So these are a way that you can essentially kind of lay out some different levels, some different price points where the market might be headed. So basically with this Fibonacci extension, I traced it from the lows that we had when reciprocal tariffs were announced back in April up to the high that we had in May, and then it comes back down here to the low point. That's how you set a Fibonacci extension, and then it kind of lays out levels you can be expecting to potentially see. And right now, what we're looking at based off of these Fibonacci levels, at least what I am paying attention to, would be the next key level right around 63.34. So a ton of room up for that. Beyond that, I would say 64.67 is another level you want to be paying attention to. And if you are extremely bullish, I would be looking at right around 6,900, just below that 7,000 mark, which sounds pretty crazy at the moment, but you know what? The market can remain irrational longer than you can remain solvent. So as of right now, those are some of the key levels I'm paying attention to, but we are at all-time highs. Everyone's 401k is very, very happy at this point. And so, like I said, there's a couple of reasons why we're trading at these levels. Obviously, tech is kind of leading the way right now. You had Nvidia that became the world's most valuable company, which we covered last week. Again, trading upwards of, I believe, 3 trillion in market cap right now, just absolutely insane. So that's kind of leading the way right now. Overall tech, AI expectations, a lot of speculation around that is really pushing this market up. Now, one thing to also take note of on the S&P 500, if we look at the relative strength index, RSI, as of right now, we are touching overbought territory, sitting at 70 on the RSI. So that is notable. But again, keep in mind, just because something is overbought doesn't mean it's going to necessarily go down right away. This thing could continue to run, especially considering the fact that we are still in a headline-driven environment. So a couple things to pay attention to here. I believe a lot of investors, a lot of traders are starting to front run the Fed. What do I mean by that? I mean that we initially expected that the Fed was going to cut rates in September, and now all of a sudden we are pricing in a 25 basis point cut as early as July from what I've seen. So as of right now, we are looking at about an 81% chance of a rate cut in July, followed by another rate cut in September, and then another one potentially in October. This according to CMEgroup.com. You can check it out for yourself under probabilities, and it kind of lays out for you, what is the probability that we get a rate cut at certain points, right? So as of right now, that's what we are looking at. Typically, anything above 70% is a lock-in. So at this point, we could be looking at July and September rate cuts. So that is one thing to pay attention to, and part of the reason why the market might be going up. And if anybody didn't get a chance to check it out yet, I did another trader interview with Tom from Tailored Trades that we dropped this morning, and it was a fantastic interview. Tom is great when it comes to economics and the macro picture. And one of the things that he pointed out for us on that interview is the fact that the Fed basically tries to mirror the 2-year Treasury bond, right? And so for those on YouTube that are looking at my trading view right now, I have the 20-year, the 30-year, the 10, and the 2-year listed out here. And then we get the Fed fund rate, which is, of course, right now at 4.5. And as you can tell, based off that, you got the 2-year trading down here with the yield at 3.746%. And so obviously the Fed rate at 4.5 is well above that. And so if that continues to stay low like that, obviously the Fed needs to catch up to that. And how are they going to do that? They're going to do that by cutting the rates. So I believe that right now what we're seeing is a lot of front running for that anticipated Fed rate cut. And that's why we're seeing the market trading at all-time highs right now. Let's do a quick check-in live here on Bitcoin as of right now. Pretty quiet, up 0.2% right now, sitting at 107,566 at time of recording. Looking here at a weekly chart on this. These are weekly candles, and it still looks very bullish. Obviously, we have the all-time high up around 112 that Bitcoin is looking to retest. And as of right now, based off the past week's candle, very bullish, and looks like at least in the near term, we're setting up with a potential bull flag here. Might be breaking out to new all-time highs on Bitcoin, but we will see what happens. Again, we're in a headline-driven environment, so that's what we got on the market right now. So things seem to be up and moving in the right direction. Let's move on to our next piece here, some macro news. So President Donald Trump, as we all know by now, is proposing his, quote, big, beautiful bill. And we did get an update on that as all the folks on the Hill have been working overtime this weekend trying to get this thing passed and through some hurdles. So this, according to CNBC, Trump's big, beautiful bill clears key Senate hurdle after high drama. So President Donald Trump's big, beautiful bill cleared a key procedural hurdle in the U.S. Senate late Saturday night, pushing the massive spending package one step closer to the president's desk. The vote on a motion to proceed to final debate on the bill passed with 51 yeas and 49 nays. Every Democrat and 2 Republicans, Senators Thomas Tillis from North Carolina and Ron Paul from Kentucky, voted against it. The actual voting took hours, and the measure only passed after 3 Republican holdouts, Senators Mike Lee of Utah, Rick Scott of Florida, and Cynthia Lummis of Wyoming, folded and voted yes. Senator Ron Johnson of Wisconsin, an outspoken critic of the bill, ultimately changed his vote to a yes from a no. That additional Republican vote gave the bill 51 yeas, so Vice President J.D. Vance did not need to cast a vote to break a tie. President Trump was, of course, very happy about this. He hailed the late-night vote passage major success. and said, quote, very proud of the Republican Party tonight, in all caps, late night on Truth Social. So obviously he's happy about that. The interesting thing here, it's kind of funny. The Democrats are basically going to force them to read this 940-page bill. They want it read out loud once it heads to full debate on the Senate floor Sunday. Schumer wrote Saturday on X, quote, we will be here all night if that's what it takes to read it. The vote comes after weeks of turmoil and tension over the massive package that exposed bitter policy disputes and emboldened some firm Republican holdouts. The Senate bill could add over $3.9 trillion to the national debt, according to a Congressional Budget Office analysis. You obviously have people on both sides of this that feel very strongly about what should or shouldn't happen here with this bill. Obviously, it's razor thin, 51 yeas, 49 nays, and the fact that you've had some Republicans that themselves feel like this should not be passed, obviously it's a razor thin, the margins here. So it's going to be very interesting to see what happens with, the Senate, and then obviously, the House trying to get this passed. President Trump wants to put ink on this before the 4th of July. So there is a very, very tight deadline on this right now. And this is something that obviously the market is paying attention to, whether or not this gets, passed or not. We have a July 4th deadline. And so this is going to be all the news this week. Even as I record this, they are working to essentially get this passed. So we'll see what happens here. But somebody who doesn't want this to get passed, our good old friend Elon Musk, who, ripped into the president's proposed tax bill a few weeks ago. Tesla sold off Trump, and Elon went back and forth, a lot of drama. And then Elon essentially apologized, kind of went quiet. Well, he's not quiet anymore. I think if I had to guess, he's probably getting nervous that this thing is actually going to pass after what I just shared with you. This article here basically saying Elon Musk rips into utterly insane Trump-backed mega bill, so he is back at it. So Elon Musk ripped into the Senate's massive domestic policy package on Saturday, calling it, quote, utterly insane and, quote, destructive, pointing to provisions in the bill that would raise taxes on many solar, battery, geothermal, wind, and nuclear energy projects. Musk's automaker Tesla produces cells and installs both battery energy storage systems and solar photovoltaics as part of its energy division. Musk's remarks come weeks after he first hurled harsh criticism against the bill, which is backed by President Donald Trump. Quote, the latest Senate draft bill will destroy millions of jobs in America and cause immense strategic harm to our country, Musk wrote on X, the social network that he owns. He said, quote, utterly insane and destructive. It gives handouts to industries of the past while severely damaging industries of the future. He continued hours before the Senate was poised to hold a key vote on the package. The Tesla and SpaceX CEO, who is the wealthiest man in the world, has been an outspoken critic of Trump's big, beautiful bill. Views that in part triggered a public feud that erupted earlier this month between the two men. So, listen, if you are in any way, shape, or form trading Tesla, like I am, this is big, big news depending upon what side you're on. I currently have some puts on Tesla personally. It was actually more so of a hedge than anything that I placed late on Friday, but this could be some more downside for Tesla. The fact that Elon is not being quiet and as far as investors are concerned, just simply focusing on Tesla. The fact that he's stirring up political tension again. If we get President Trump, tweeting back at him, this could be a full run back replay of what happened a couple weeks ago. So not great news if you're a Tesla bull. And honestly, right now, Tesla doesn't look that great to begin with. If we take a look at Tesla, basically on Friday, really the past couple days, it had been toying around with the 325 to 330 range, and then, broke down to 316. Kind of an indecision candle basically is what happened when we closed the day at 323. But we are below the 20-day moving average, and, doesn't really look that strong to me, at least, after that initial bullish run last Monday, post robo-taxi event in Austin, Texas. So that's what we got right now. We'll be definitely keeping tabs on that to see if the feud between Trump and Elon goes for round 2. Who doesn't love a good feud, right? Makes some great content for this show, at least. So moving on, we had some other news on Friday as well. President Trump announced he's ending all U.S. trade talks with Canada over digital services tax. So President Donald Trump said the United States is immediately terminating all discussions on trade with Canada. Trump said on Truth Social that he made the decision in response to Ottawa imposing a digital services tax on U.S. tech firms. He said, quote, "We will let Canada know the tariff that they will be paying to do business with the United States of America within the next 7-day period," Trump added. So this actually sent the markets down after those all-time highs were breached, or made rather, when this news came out. It was kind of like midday Friday. The market had a knee-jerk reaction to it and was bearish for a little bit of time based off of this news, and then kind of recovered a little bit. But this is the full post from President Trump on Truth Social. He said, quote, "We have just been informed that Canada, a very difficult country to trade with, including the fact that they have charged our farmers as much as 400% tariffs for years on dairy products, has just announced that they are putting a digital services tax on our American technology companies, which is a direct and blatant attack on our country. They are obviously copying the European Union, which has done the same thing, and is currently under discussion with us also. Based on this egregious tax, we are hereby terminating all discussions on trade with Canada, effective immediately. We will let Canada know the tariff they will be paying to do business with the United States of America within the next 7-day period. Thank you for your attention to this matter." So as far as the amount of trade that we actually do with Canada, the U.S. goods trade with Canada totaled roughly $762 billion last year, according to the Office of the U.S. Trade Representative. Following Trump's announcement, the S&P 500 and the NASDAQ composite both turned negative, retreating from record highs that they had reached earlier in the day. This is going to be definitely something to pay attention to, and could have massive implications, of course, for, trade talks. Keep in mind that we have that trade deadline coming up as well, which I believe is July 9th for literally all the countries in the world. But the fact that you have Canada, which is, usually a country that we're able to do business with pretty easily. You had the agreement between Mexico, U.S., and Canada, and the fact that we are now severing ties with Canada as it relates to tariff talks, and we're just going to hand them, a set tariff rate and say, look, if you want to do business with us, this is what it is going to make things very, very interesting. That'll be coming out, as President Trump said, in the next 7 days. So that is definitely something to pay attention to. Could heavily impact, some obvious, trade deals that could be happening there, and what kind of imports, exports that either country gives. So, but that is a massive tax, at least as far as President Trump sees it. And from the sounds of it, they basically want to, the country of Canada wants to do like a retroactive tax on us for those tech companies, dated back to like 2022, I believe. The first payments from Canada's digital services tax, which was enacted last year and applies retroactively to 2022, are set to be collected Monday. The tax would hit both domestic and foreign tech companies, including U.S. giants such as Amazon, Google, and Meta. So, very interesting. And I would venture to say that, we're going to have some action on our side as well, based off what this article says. Treasury Secretary Scott Bessent said later on Friday, obviously we think it's patently unfair to do it retroactively, as in the servicing tax. He now expects that Trump Trade Representative Jameson Greer will start an unfair trade practice investigation under Section 301 of the Trade Act of 1974, quote, to determine the amount of harm that the new Canadian taxes pose to the U.S. So another thing to pay attention to, if we get any updates on that this week, on the shortened trading week that we have, that could be massive, and could have some implications for the market and the rally that we are currently in. So let's move on from that. So the market has been flying high. One thing that did not fly high on Friday was Palantir. This thing has been on a rocket really since back in August of last year, where it was trading right around $21 and just recently hit all-time highs of 148. This thing has been flying high, but on Friday, this thing got smoked. It was down over 9%. Massive red day, closed below. It breached and closed below the 20-day moving average. And so, part of the reason why it might be selling off right now is just simply profit taking. And, there could also be some other implications here, at least according to this article from Yahoo Finance. Palantir stock is pulling back in Friday's trading after setting a new record high yesterday. Investors are taking profits after a strong bull run, and some may be reacting to the latest Department of Defense budget request. Palantir trades at a highly growth-dependent valuation, but the company has big strengths in crucial areas of the AI market, so that's obviously been propping it up. But as far as, it falling almost 10% on Friday, I mean, that's a massive pullback. And, it does make sense on some level that you're going to have some profit taking. I think the more interesting piece of this article is basically the fact that, investors may also be reacting to the Department of Defense's budget request for a base budget of $848.3 billion for its 2026 fiscal year, which represents a small decrease over the previous budget after accounting for inflation. So basically, we're seeing a decrease in the defense budget, and so that could be impacting Palantir right now as well. It's interesting to note that right now, from a valuation standpoint, this thing is trading at approximately 239 times this year's expected earnings and 84 times expected sales, according to Yahoo Finance. That is a massive, massive valuation. Some might say extreme valuation and might just simply be overbought at this point. Now, as far as some key pullback points to be paying attention to, we talked about Fibonacci extensions earlier for the S&P 500. For Palantir, I laid out Fibonacci retracement levels. So going from the low in the past year to the high, which was just recently at 148.22, and laying out some key pullback levels that we could see on Palantir before a retracement and potentially a retest and maybe even a new all-time high. Who knows where this market's going? But as of right now, some important levels to pay attention to. The first one would be the 23.6% retracement level on a Fibonacci retracement, which would be 118.25. And that's a pretty conservative level as far as Fibonacci levels go. I like to pay more attention to the 38.2% retracement level, which would be just a hair below 100 at 99 at 71. So basically you're looking at 118 and 100 for important levels on Palantir. So if this thing continues to pull back, if the overall market is weak, I mean, you still got a lot of downside to 118 at the very least from 130. So as far as what the options market looks like on Palantir right now, surprisingly, still very bullish. We had a put to call ratio on Friday of 0.52. So you had almost 1 million calls versus almost 500,000 puts. Still a lot of bullish action happening on Palantir. Who knows? It could just be a one-day sell-off. It's a pretty notable sell-off, though, considering how much of a drop it had, and especially given the fact that it was on high volume. So it was a conviction move there to the downside for Palantir. So if anyone's looking at it, I don't know if I would necessarily be betting on it going down. The trend is your friend. It's obviously been an uptrend for a while now. It's been hot, especially if the market's hot. It's hard to fight the trend, but, we could see Monday a bit of a relief to the upside, and you might get a nice technical setup where it would be advantageous to buy some puts for maybe a retracement down to that 118 level. Who knows? I will definitely have it on my watch list. It's not something I'm actively in right now, though, but just want to put that on your radar. Now let's take a look as we head into July, what the seasonality for the month of July looks like. So, it's important to know historically, given the month that we're in, what does the market actually look like, right? It can kind of give you an idea of what to potentially be paying attention to, what you can potentially expect. Obviously, it's not guaranteed, but it's still nice to pay attention to it. So, taking a look at equity clock here, S&P 500 index seasonality. We covered June last month, of course, talked about how it was kind of choppy, kind of bearish towards the end of the month. And obviously that didn't play out because we're at all-time highs. Keep that in mind. But as far as the month of July goes, at least over the past 20 years, it is the most bullish month out of the entire year. If you take a look here, basically the max return we got over the past 20 years was 9.1% on the S&P 500. That is massive, and actually the third largest max return out of the year, and that came in 2022. And basically the average return that you're looking at over the past 20 years for the month of July is 2.5%. And as far as percentage returns on average over the past 20 months, if you're looking at all 12 months out of the calendar year, July is the highest, sitting at 2.5%. The second highest would be November, 2.3%. So we are entering technically a historically bullish month. So that is notable. Based off of that data alone, one could venture to say that this rally in the S&P 500 just might continue to go up, and we might just hit some of those fib levels I was mentioning earlier, like that 63.34 level that we're, creeping up to now. So who knows? But the month of July is a very, very bullish month. So just want to have that on your radar. And then lastly, let's take a brief look here at the economic calendar for the week ahead. Keep in mind, we do have the 4th of July on Friday. So the market will not be open on Friday, of course. But as far as some of the key economic data to be paying attention to, on Monday, we're going to get Chicago PMI at 9:45 a.m. Eastern. We're going to get ISM manufacturing PMI coming out 10 a.m. Eastern on Tuesday, July 1st. You're going to get Fed Chair Jerome Powell speaking at 9:30 a.m. on Tuesday. And then JOLTS, job openings. This is a big one, folks. Tuesday, 10 a.m. That's going to be coming out. Looks like the previous was 7.39 million. We're expecting 7.45 million. So we're going to see how many actual job openings we have right now. We had a decent report on that last month. So we'll be, anxiously awaiting that to see what the state of the job market is. Obviously, the Fed is going to be paying attention to that. On Wednesday, not a whole lot going on. 8:15 a.m., you do get ADP non-farm employment change, crude oil inventories at 10:30 a.m. Be paying attention to that. And then on Thursday, July 3rd, average hourly earnings month over month comes out at 8:30 a.m. Eastern time. And beyond that, you got non-farm payrolls at 8:30, unemployment rate at 8:30. Those are going to be big. S&P Global Services PMI for June comes out at 9:45 a.m. Eastern. And ISM non-manufacturing PMI comes out at 10 a.m. So a lot of data dropping on Thursday, which is an early close day for the market. Keep that in mind. The markets do close at 1 p.m. Eastern on Thursday, July 3rd. And then, like I said, on Friday, it's a holiday, Independence Day, and the markets will be closed. So a lot to unpack there. That's what we got going on right now. We're going to see what happens on the Hill over the next couple hours, couple days, as far as this big, beautiful tax bill, whether or not it's going to, pass, whether or not President Trump is going to be able to sign that before the 4th of July, as he would like to have happen. We're going to see what happens there, see if Elon tweets anything else that might be disruptive to his own Tesla stock. We'll see what happens there as well, and see if the market can keep ripping. I hope you're making a ton of money out there. Make sure to drop a comment. Let me know what you're paying attention to, what your thoughts are on Palantir, thoughts on Tesla, some of the hot stocks flying high right now. Not to mention the fact, we didn't cover it, but Coinbase and Circle stock, when it comes to the Coinbase, or excuse me, when it comes to the stable coin legislation. Coinbase, has been flying high. So let me know what your thoughts are on that. If you're trading that, we saw a bit of a pullback in that last week, so we'll see if that can retrace or not. But other than that, that's what I got for you. Like I said earlier, we did drop a new interview that came out this morning, actually, Sunday morning, with Tom from Taylor Trade. So make sure to check that out. It was a fantastic interview. A lot of good information in that. Make sure to share with a buddy. Make sure to like, subscribe, and follow wherever you listen to podcasts. We will be back on Thursday morning for the market midweek check-in, folks. Hope you have a good one. And remember, plan the trade and trade the plan.